Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. There we go. It was muted. Welcome to December. Welcome to this week's update. We have a lot to cover from a recommendation standpoint. I always start with just the recommendation, the call to action. That's the first thing we'll go over. And then I'll give you the whole market analysis, and then we'll kind of come back to the justification behind that recommendation. But I always want to start proactive, call to action. Let me get the screen shared up there so we can jump right into that. Okay. So the first thing, and if you're watching this close to real time, I'm going to drop this in an email to you. You'll be getting it along with the link to the video so you can know for your operation. Also, you know exactly what I mean. If you're watching this close to real time, you know exactly what I mean by Q4 bushels, the Q4 bushels. But let's start with it. A lot of work to get done today, and then we'll recap previous recommendations from previous week. So three actionable items that I am recommending today. 3 action items. Step number 1, recommendation is to sell 45% of Q4 soybeans and re-own in the July contract. Sell 45% of Q4 soybeans and re-own in July. Action item number 2, this one is in relation to corn. We're going to sell 40% of Q4 corn and re-own in July. We're going to sell 40% of Q4 corn and re-own in July. And then the action item number 3, we're going to re-own 30% of corn, and this is the corn that was sold in mid-November. So there was a sale recommended in mid-November. If you would have immediately re-owned, depending on when you got in and out, that would have been probably 10 to 15 cents higher than what we are now, and I'm recommending that we re-own that volume here now as well. So we're going to go through the whole report. We're going to go through the whole market update, and then at the end, we'll kind of rehash the recommendations, the thought process behind these 3 bulletproof recommendations, as well as, these 3 bullet point recommendations, the 3 recommendations from this week, and I'll also just revisit previous recommendations, and we'll go through the thought process behind those. So now we'll go slip into the market items. Also remember, if you have any doubts, if you have any questions, send me an email. At the end of the videos, we always answer emails, so we can answer those here. So pretty significant, pretty aggressive recommendations. I don't know if aggressive is the right word. Pretty significant recommendations for action this week, and I wanted to make sure we give that the needed attention. Now let's shift gears and let's talk a little bit about just the market update. There we go. Got pictures, and I'm going to go ahead and get this set up so that we can edit it. Although I don't need to edit these. These pictures are, it's a field of soybeans in the state of Mato Grosso in Brazil. This is actually the city of Querência. That's where I lived as a kid and as a teenager. So this is hometown, so to speak, but my hometown in Brazil, not U.S. And here's another picture, same operation, same farmer friend from down there. Crops are looking real good. That gives you an idea. And just from the standpoint of where is it developmentally, and this is the one that I'm going to go ahead and highlight. Where are these crops developmentally? And we'll get a highlighter here. So this beige is emerging. And then the gray, well, the green is the bigger one, which would be vegetative development, is kind of how we would translate that. The gray is flowering. So if we want to think of weather risk, about 10% is flowering and it has that weather risk. And then about 3% is filling pods. So that's where they are. So the lion's share, 76%, is in that vegetative development, not a super vulnerable time from a weather standpoint. They had good weather to get a good stand. And I did not show the planting progress video or image this week because Brazil's 90% planted on their soybeans. That's planted in a timely fashion. They'll probably, spread out that last 10% over, what it's like when you get 10% done. Well, it'll be, 3% and then 7%. They'll get done before too long. Planting's right on time. It's 90% of the way done. There's no story on planting. So we're going to be tracking here just the development of their crop down there. And 3/4 of it is in this what's called vegetative development. And if some of I farmed, but sometimes I get a little mixed up on my technical language between English and Portuguese. I get a little bit mixed up. So when I'm translating back and forth, if there's a better way to describe a term that I'm using in Portuguese and English, just go ahead and drop it in the comments, and we can go from there. This is where we want to spend most of the time every week. We show this pyramid. This is the philosophy behind what we do. It all starts with a well-structured market plan portfolio. We're looking at your grain sales as a portfolio, and we build a portfolio. And then within that portfolio, that base level, that blue level of the pyramid, within that base level of that portfolio, then we manage each one of your buckets, each one of those baskets within your portfolio separately. And what we're focused on right now is those Q4 bushels. That's what we're focused on right now. So if you're watching this close to real time, we've gone over this conversation. We know you should know exactly which bushels I'm referring to. The green, the middle of that pyramid, that's where we kind of just do a rundown on market information, right? So I'm a big believer that each farm, what is right from a marketing standpoint varies from farm to farm. It is not a one size fits all. So you build your portfolio, we'll build it together. If you're not watching this in real time, reach out and we'll get that done together. But once a portfolio is built, that is a solid portfolio based on your needs, then how to adjust each one of those strategies within your portfolio, then there's a little bit more structure as far as kind of not necessarily one size fits all, but more of a one size fits all within that. And that's where we're going to look at seasonals, funds, technicals, how to navigate this market. And then the yellow, that's some weeks I'll say, hey, there's no action required. If you want to get back to the shed or get back to whatever other chores you have going on, watch this video later. That's fine. This week, there is action required. I expect you to finish watching this video, punch some numbers, think about it a little bit, call your buyers, make some moves so that you're taking action on the market this week. So action is important this week, in my opinion, and we'll go from there. So let's just talk about the markets real quick. Some of these images I'm going to spend more time on. Some of them I'm going to spend less. This one, the funds position, both for corn and soybeans, I'm not going to spend a tremendous amount of time with. And the reason is very simple. It's because if you look at this position of the funds, this is currently where we're at. Well, I don't want that. I want a little bit better there. And let's see if we can get the yellow here. If you look at this position here, it's just basically in line with the reset levels. So yeah, okay, funds sold a little bit more. There's no real change in strategy. It's not like we went from here to here to here to here, right? Or it's not like we went down here and had a major drop. There's no clear trend as of this point. Basically, they're holding a sold position. It is not a huge sold position. The one thing that I would say, and let me back out of some of these so I get it cleaned up. The threshold to where it's worth buying, it's worth buying because the funds are oversold is right around in here. So technically speaking, when we get to the end, we're going to say funds are oversold. So it makes sense to re-on it. So the one thing I would say about beans is that funds are oversold. Funds are oversold, gives you reason to buy from that vantage point. The other thing I wanted to point out, and I'm not going to mark it up, but just look at that black line. And we looked at this, I believe last week, or I think it was last week, and maybe the basis was weakening and it completely went in the opposite direction. We're looking at a basis level. This specific example that I got is from Tippecanoe County, just the home of the Boilermakers. That's my alma mater there. So just for the sake of an example, that's the one I give. And they have this basis tool is free. You can go on their website. It's great, and you can get a lot of great information if you want to look at your specific county. It has it has a lot of the states of the Corn Belt, not all of them, but it does have a lot of the states. But basis levels are strengthening, and this is just a visual. There could be any number of other visuals. There is demand for cash beans. The other concept that we've been talking about is spreads. So if we want to look at this one I will mark up a little bit. If we want to look at this particular image, let's maybe get that blue. So what we want to see here is give me grief. Oh, that's not working. That's okay. But this is the January contract minus the July. If you want to look up here, that's the January minus the July. And it's not a huge thing, but you could see this level up here. It's what's called bull spreading, where the January is rising faster than the July. The January is rising faster than the July. So we'll talk about this again more later, but the thought process of selling Q4 beans is because those are going to be, if you sell them, that's going against the January contract, which is relatively high. I'm not saying it's anything astronomical. It's nothing to write home about, but it is basically, we got to the highest level since July, really. You'd have to go back to this level to have a higher spread level between the January and the July. So we're at the highest level since that, and you don't have that much time left on your Q4 bushels. So selling that and then buying the July, which is relatively weak, so to speak, or the spread is friendly. That's part of the thought process behind that. The other thing to point out is the beans. Nobody has a crystal ball, and I don't promise to have a crystal ball, but the thought process, in my opinion, is this. You have, for soybeans, you have cash prices at if you look at the basis, cash prices, not dollars per bushel, but basis, right? So you have some of the strongest basis bids that you've had in months. You have the best spreads since July. You have a limited amount of time to get out of Q4 bushels. So in the midst of that entire scenario, and you can re-own July close to the lowest level since 2020. So I don't know, maybe beans are going to continue selling off. That could happen, right? But what we're making is risk management decisions. You can change a relatively strong basis and a relatively strong January for a relatively weak July position, and you have a limited amount of time to do it. So yeah, relatively strong cash for lowest futures price when you have to get out of this anyways because it's a quarter four bushel, where in December, that's a move that you make. So that's where that recommendation is that's the thought process behind that recommendation. Also, it's important to acknowledge that both the basis levels and the spreads, even though the board of trade is weak, both of those are giving bullish symptoms. So you have a bearish price action with bullish symptoms. Could it continue falling? Absolutely, that could happen, but it's not like you have a market at the bottom with symptoms that it's going to go lower. When we fell to this lowest level, the symptoms were like, well, maybe it's oversold, right? Spec funds are saying that, they have a large sold position. So that's the thought process behind it. I did want to show, I wasn't exactly sure where to put this in, but this is an interesting point that I just wanted to make note of because it does, our customers in Brazil, this is what they are very concerned about. This is the top of the priority for them. And I just think it's important Brazil is the largest soybean producer in the world. I think it's important to be mindful of the things that matter to them. This is the exchange rate, and I just want you to pay attention to that move right there. Basically, their currency devalued, right? The strength of the dollar, and then their currency devalued. That might be the highest level ever, but it's really close to it. If it's not the high, the worst exchange rate, so to speak, for them. But the thing is, when that goes up, they export dollars, right? They export soybeans, which are a dollar-based export. So when they have a weak currency, they get to bring in more Brazilian currency, more reais, with the same amount of bushels. This move is the equivalent to maybe about a 50 to 70 cent rally in soybeans. So what should I do? And what's very, very interesting about this move is that they had this huge rally over the last, 1, 2, 3, 4, 5, 6 sessions. With this enormous rally, and with the fact that Brazil is the largest soybean producer, you would expect a significant amount of selling pressure. And to some extent, yeah, we got it, right? Because soybeans are at the lowest during this period. Soybeans got basically to their lowest level. But as this thing rallied in Brazil, as their exchange rate rallied, it wasn't the board of trade that took we didn't get a mirror image of that. We didn't get a rally in their exchange rate in a push down of the board of trade. Maybe that happened initially, but once the Chicago board of trade price stopped going down, even as their exchange rate kept going up, what we started seeing was a weakening of their basis for old crop and new crop. What's interesting about that to me is that maybe the Chicago Board of Trade price will be absolutely destroyed and punished if there's a ton of soybeans sold on the Brazilian market. But I wonder if that won't come out of their basis instead. And this last move in soybeans kind of confirmed that. So an exchange rate, let me explain that again. The fact that the exchange rate went up and the soybeans in Chicago weren't able to continue falling, that might be reason to believe that if we have additional selling pressure from farmers in Brazil, that won't necessarily convert into more selling pressure in Chicago. It might just take away their basis, because that's what happened on the last leg of this exchange rate move. So it stands to reason that that may be what happens moving forward. That's potentially friendly news for Chicago, not necessarily for cash prices in Brazil. My bias is that farmers in Brazil who are not in a position to store their grain, but also haven't forward priced it, they're going to have a difficult decision. And I think that it will make sense for a lot of them, January, February, March. It will make sense for a lot of them to say, I have these overrun bushels, I had a good crop, let me sell it and re-own it in Chicago. I think that will be a decision that makes a lot of sense. What that would do is drive a wedge between basis and Chicago. It would add selling pressure to their cash market, but not necessarily to Chicago, because it would sell on the cash and re-own it, so it neutralizes Chicago. I don't want to get sidetracked, but I do think that's something that I will very likely be mentioning every week, every other week, every month. I think that this is a major story that we need to be watching, is how is farmer behavior in Brazil as they harvest what is very likely the largest soybean crop, maybe the second or third largest, but it's on the podium of the one of the top three largest crops of soybeans, even if it doesn't get the gold medal. Corn, also not going to spend a ton of time on the position of the funds of the corn, but I do want to point out a little bit of it just because they are still long, right? They still have a long position, and they lost a little bit of the seam, but although all through November, from November 5th through 26th, they were long, and they're still close. Not a huge story there, at least not yet. Now, if they do a roundabout and take off selling again this week, that's something we need to keep our eye on. But so far they're still long. And they cut back a little bit on their long position, but not significant. Similar story with basis. Basis has strengthened all throughout November. Basis strengthened last week of October, and then all throughout November. Corn basis, this is against the March contract. Again, this is Tippecanoe County, but it's a similar story. Clicking around, I looked over multiple regions, kind of look at it in multiple ways. Basis is strengthening, which means there is demand for cash corn. That's good news. And it's a similar rationale, right, except with the March contract. But if you look at the spread between the March and the July, that spread really, since the lows in August, that spread has been strengthening. Let me make some markings here on this because it's important. So we have basically the low of the spread actually came in here, but pretty close to the late summer, or just in the summer, is where we kind of got the lows to this spread, and then we've seen it just stair step up here. Also, right in here, we got what's called a golden cross, which is the 20-day crosses the 200, and it's still going up. It's really respected. It's really respected this 20-day mover ever since it got above it. It's respected it pretty well. So I'm not saying that I don't want to make more of this than what it is. I'm not overly bullish, but the question is, will corn rally or will corn not rally? And you can definitely see how the spread has improved. If you look at the lows here, not just maybe 19 cents would be around in here. It's improved about a dime over the last few months. Will it continue improving? It may, but what typically happens in this scenario is you get the cash markets moving up, then you get the spread being friendly, and then eventually you get the futures market to move, which brings us to the last. Just taking a look at the July corn contract. What's going to happen? We don't know. Nobody has a crystal ball. But if you look again, August, we had the lows. It hasn't quite stair-stepped like the spread has, but it's working its way up. And this is July futures. In my opinion, is it more likely that this goes down? It could, absolutely. Or is it more likely that this goes up? Well, basis levels are saying that corn is dear, and the spreads are saying that it's friendly. So you get an opportunity to exchange if you have quarter 4 bushels. December contracts coming to an end, right? So I'm already looking at the March, but you have the March contract trading at pretty close to the highest levels in relation to July. So you can sell that March corn. By selling cash corn, you're essentially selling that at a friendly basis level, or one of the better basis levels we've had. So you're selling one of the best basis levels, and you're selling one of the best spreads that we've had in the last several months. You're selling that, and then you're re-owning July, not really at the lows, but at a pretty low level here. That's the thought process. So let me circle this here. You're re-owning it right in here, and the thought process is, well, the spreads will catch up. The futures will catch up to the spreads, and the basis move will have to get a friendlier move. So the wager is this corn likely moves higher. It's also December, right? typically we get friendly moves coming into the spring. Typically we get a lot of times you get a little Santa Claus rally. I'm not overly, I'm not saying this thing is amazing, you've got to do it, this is going to change your life. But if you could get, say, a 20-cent move, if you could go in here, get a 20-cent move, that every little bit helps, right? So that's the thought process with that. And then again, maybe that 20-cent move is shorter term, and then we can reevaluate after that. So we'll go back to the recommendations, just kind of look at this. We've talked about the call to action. It's important to say that the seasonals here are a neutral for corn, and the seasonals on soybeans, they are a sell, but they are a sell because of weather risk in South America, which we really haven't had. You all saw the pictures of the beans down there. The corn indicator from managed money is neutral. I mean, they're technically bought, but they're not overbought. Now, from a soybean standpoint, they are oversold, so this would be a buy. And then the trend here is down, and the trend on corn is down as well. I don't expect this to be an incredibly bullish market, but as we look at managing a portfolio, what we have is friendlier. Let's see if we get strengthening basis levels for corn and soybeans. Corn and soybean calendar spreads are bull spreading. All right, so that's now let's just revisit. I want to revisit one more time the recommendation, and then we'll go to Q&A. So we're going to sell 45% of quarter 4 soybeans in Rion in July. We're going to sell 40% of quarter 4 corn in Rion in July. And we're going to re-own the 30% of corn we sold in mid-November, and we're going to use the July contract. That's the recommendation. And then as we talk about results, this is just a way to kind of look back on previous recommendations. I'm not going to read through this, but I will send this to you in an email so you can have just the recommendations as we do the play-by-play on what has been recommended so far. Now, with that and without further ado, let's maybe get a picture of some soybeans up here, because that's fun to look at. And we will go to, I guess we'll just make the screen big. We'll go to the Q&A. All right, there we got the first question. Should I sell beans before the Brazil harvest, or should I store them? Whenever I have a question this is just in general about market questions, right? But for me, I'm always thinking about what bushels are we talking about? Kind of that base level of the pyramid, that blue level. What bushels are we talking about? And what portfolio, what of your portfolio, which bucket are we managing? So that being said, I don't feel like this is a generic answer, and I already gave my very specific recommendations on what to do. So if you have bushels, say custom storage, or that you're gonna have to move pretty soon, or you're gonna have cash needs, if you have bushels that would be categorized as quarter 4 bushels, that's kind of a no-brainer, right? We made that decision back when we built your portfolio, and there's a very specific recommendation on that. And those need to be gone, because that needs to be gone. The one decision I would say is like, if depending on, you have your own storage, and then it's like, should this be a quarter? Should this be a quarter 1 or quarter 2 sale, or should I wait and push this on? How should I adjust that? And really, this is a big deal to me, because the way you structure your bushels adds so much value within those buckets, adds a tremendous amount of value, and it adds value on multiple levels. Number one, you have to take into consideration your risk tolerance and your ability, which tools are you going to use, your logistics, your cash needs. There's a bunch of factors for me that you need to sit back and I'm not talking about market factors necessarily. I'm talking about your operational factors that will dictate, how you will manage your bushels within that portfolio. That is the actual answer to this question, but I'm going to give some, and if you're not watching this in real time and you want to go over that, just reach out to me. Let's get in touch and work on that. I will give you just some pointers, though, some thoughts to just kind of digest. It is my opinion, and it's my opinion because of a bunch of study, and I believe that in general, most years, the returns on storage of soybeans are somewhat ignored by U.S. farmers, or they're downplayed. Brazilian farmers, they think soybeans first, corn second. U.S. farmers think corn first, soybeans second. And I think that the returns to storage of soybeans, and I think this because I studied literally returns to storage of corn and soybeans. Farmers, there is a bias that makes farmers overlook the positive returns to storage of soybeans, and it makes farmers have a tendency to sell soybeans too soon in the U.S. Now, that's where I'm coming from, right? And we could talk about the bias, but there's data that supports that. There's anecdotes and research and all. Returns to storage on soybeans are undervalued, underappreciated, used by U.S. farmers. And that's even adjusting for interest rates and all that stuff. That being said, you've got to manage that game to get those returns. You've got to manage that well, and you've got to use that well, and you have to be mindful of how to navigate that market. So should you store before or after? For me, the real answer to that is you got to build your portfolio, and then you got to stick to your portfolio. And that's very, very important for a number of reasons. If you're asking, should I sell more or store more? For me, it's already the thought process is already wrong. You're trying to read year in and year out market signals instead of starting from the standpoint of saying, let me build out my market plan. Let me build out my market portfolio, stick to that and adjust it based on management that makes sense. So, the huge question, and I'll get to that. That's actually another question that we have, and I'll touch on that. The huge question is, there's this monster crop coming out of Brazil. Not enough of it has been sold. Only about 15% of it can be held in on-farm storage by Brazilian farmers. And of that 15%, a lot of those bins are going to be empty in time to receive double crop corn by, say, May, June. Or June, July at least. So the first 6 months of 2025, we're going to see very likely the largest soybean crop in the history of the world hitting the market, undersold and not available for storage, and that's going to flood the market. Will that take a toll on basis in Brazil, but not Chicago, or will that just absolutely destroy Chicago? And should I slip my beans in before that monster crop comes, or should I just wait and see? Now, this isn't necessarily a new problem. If you look kind of trendline yields, Brazil has had significant growth in production year after year, and they always have this monster crop hitting the market in the first half. So I think fear of that monster crop has made farmers tend to sell soybeans a little quicker, a little more aggressively in the U.S. And to some extent, that's okay, but that's also opened up opportunities for returns to storage for farmers willing to hold off on bean sales and place that on the domestic market. So I'll go to the next question. Let's get that showing up there. How would 100% tariff on Brazil impact corn and soybean prices? So the it's no secret, BRIC nations, Brazil, Russia, what is it, India, China, a lot of the emerging markets, but Brazil's one of them. The headline was, if you try to have a new currency, which they have, Brazil's tried to export, soybeans and other stuff to China, not using the U.S. dollar. If you try to substitute the dollar from global trade, I'm going to slap. Trump's saying he's going to slap 100% tariff on those countries. And the question is, we don't know if that's going to happen or not, right? But the idea is you've got to keep using the dollar, and if you try to step away from the dollar, there's going to be serious consequences. How would 100% tariff impact corn and soybean prices? I don't necessarily think it would impact Brazil. Isn't a huge exporter to the U.S. I mean, they export to the U.S., but it's not a huge deal, especially with grain. It's kind of, if the U.S. is buying grain out of Brazil, there's serious problems. But China is a huge buyer of grain, both out of the U.S. and Brazil. Brazil raises enough soybeans to meet the Chinese demand. So 100% tariff, let's say it goes, if they're trying a new currency, I would assume that it would hit Brazil and China. If that's the case, there will be this strong urge to just export basically a ton of Brazil soybeans would just go to China. Basically, China would need to buy all of their beans that they need from Brazil, but Brazil does produce enough beans for that. The bigger story there would probably be corn. I don't believe Brazil could supply, or not in a consistent way. Their corn yields are very variable because it's a double crop corn. So could China rely only on Brazilian corn? I think that would be an issue, and that would be something to sort out. But trade wars do finicky things. Last time we had a similar situation. What happened was Chicago went absolutely plummeted. The basis in Brazil improved. That's what a lot of farmers in Brazil are hoping for. A lot of our customers down there are, it's kind of like they're almost counting on it, right? But the dangerous game for farmers down there is usually basis is horrible. I'm talking $1, $2, $3 below the board of trade. And then a lot of times you see basis appreciate again, like $1 to $2 in a short amount of months in Brazil. So the dangerous game that farmers down there are playing, it's like, if there are tariffs that mean China needs to buy beans out of Brazil, you could see friendly basis, bad board of trade price. That happened in 2018. But if that doesn't happen, and if it's a quote unquote normal year, basis is probably going to be destroyed. So I think a lot of farmers in Brazil are banking on there being some type of tariff that helps their cash price, even if it hurts Chicago. The way that I make decisions is I would much rather be on the side of probability. So it is more probable. In 2018, that happened. Almost every other year, they have very bad basis at harvest, and then it improves afterwards. For whoever can wait beyond May, June, July, that's when you start getting, August, September, as you get that big basis move. So that is the most probable thing, if just looking historically. We'll see. There's a lot that could rock this market coming into Trump election, coming into next year, geopolitics. There's no other story so far, but there could be. What makes you bullish enough to be buying corn and soybeans? I'm not guessing markets will go up or down, or being bullish or bearish necessarily. It's not. I don't read headlines and try to guess what markets are doing. Honestly, if that were the case, just do it myself, right? The way I see it is, there is a beauty between lining up the needs of a farm with market opportunities. And so within that portfolio, good decisions can be made. You can say, let me build a portfolio farm by farm. Within this farm's portfolio, let me adjust each one of these strategies. And then within each one of these strategies, I can use all the market information I know to the idea is like constantly improve my position. How can I, manage this portfolio so that I am giving myself opportunities for success? How can I set, get the wind in my sails and have the wind at my back so that I am making better and better decisions within this management structure. So it's not like, oh, I'm bullish, this thing's going up for sure, you've got to buy it, buy. That's not the case at all. That's not what I do, right? We work one-on-one, we create a portfolio. Based on that portfolio, we manage it and we tweak it. So if you are sitting on quarter 4 bushels, we have, 3 months, we're 2 months into that, a little bit over 2 months into that, and we've been dragging my feet. All of a sudden, you get a shot at the best basis, best spreads, and best, buy-in opportunity on beans that we've had really all during this quarter. That's something we're going to strike on. Now, could it go the other way, right? Could you buy in and it goes down? Yeah, we got a little bit more powder dry, still in quarter 4 bushels. If we need to average in a little lower, we could still do that, but that's something we strike on. That's an actionable thing. We've got a calendar working against us. We've been waiting. We see an opportunity, we take it. Similar thing with corn. So it's not, I'm not trying to grasp for headlines that will make markets go up. We're just managing within a portfolio and saying, let's react to this. This makes sense. Let's go. There is a lot of uncertainty coming into next year. And I think that people who are, quote unquote, overly confident, Brazil's going to have a record crop and, we're going to raise a ton of crops and it's going to be bearish forever. It's going to go down another $3 on beans, another $1 on corn. And I think we need to be cautious. Okay. Until harvest is over, which is February, March, there is weather risk in Brazil. There is significant geopolitical risk, in my opinion, and we don't need to get into that. I'm not here to comment news or politics, but there is significant geopolitical risk. And there is significant uncertainty, in my opinion, about the economy. Will there be tariffs? Will there be inflation? What will exchange rates be? How will the market react? How will money movements react to that? Right? So there's a number of scenarios which could go either way, but they also could go up. We could get bad weather combined with an intensifying geopolitical thing, combined with funds not knowing where to go. So they want to go somewhere safe and they think food is safe. And so they rush into the market and we could get a little bump. That could happen. Right? Stranger things have happened than having a rally, having, a series of headlines that give us a spring rally, right? Or give us a late winter rally. Stranger things have happened. I mean, that's the normal thing that does happen, right? I'm being a little bit sarcastic. So, a lot of recommendations, a little bit longer video. I'm going to wrap it up here for today. Send in your questions if you have any doubts. Let's roll up our sleeves, get the work done, and stay in touch.